Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, October 22nd at about 3:30 p.m. Eastern. Well, the Dow and the S&P reversed course to trade lower today, while the Nasdaq fell more than 1% after comments on stimulus tapering from Federal Reserve Chair Jerome Powell spooked the markets that had been trading at record levels earlier today, at least the S&P did. Powell said the U.S. Central Bank should start the process of reducing its support of the economy by cutting back on its asset purchases, but should not yet touch the interest rate dial. So we'll take anything we can get here, right? Especially interest rates. So on that note, let's go on to three charts that'll give us some insight into the week to come. As we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the ETF that tracks our S&P 500 index, and we definitely, as traders, always want to know the mood and manner of the S&P 500 index. Now, the SPY touched a new intraday high today, earlier today. It went up to $454.67. The last all-time closing high was back here on September 2nd at $453.19. Now, this afternoon, when I captured this chart, though, the SPY was trading at $452.86, which is just a few cents below that all-time high. So maybe it's not going to beat that all-time closing high in the next half hour as we go into the weekend. Now, we can see that since that prior all-time closing high back here on September 2nd, the SPY fell down, rallied back up to the 50-day moving average, the green line, fell back down again, and it fell to a low of $426.36 down here on October the 4th. Then it rallied, fell back to 430, and then started back up above the 20-day and the 50-day moving average. Now, but what you can see here that it's formed is, if you can see this, it is a very shallow, a very shallow head and shoulders, inverse head and shoulders pattern. Now, that's a positive. Regular head and shoulders patterns that are if it was up here at the top of the trend, that would be a negative. That's a top reversal pattern. But when you see a head and shoulder patterns reversed like this one is, then it's actually a positive thing. And you can see that in this case, the 50-day moving average almost drew a pretty nice neckline for us. So we could, and then price jumped up above it. Now, that's a positive. Only thing we got going on here is our volume's a little bit lower. It was higher earlier in the end of September. And we did have, again, Fed Chairman Powell today, who put kind of a hitch in the giddy up of the market. We didn't want to think that they were going to stop buying. And it's asset purchases, but we knew it was coming, but it's like everything else, you don't want to think about it. So we'll have to see what's going to happen with that. Now, we do have resistance back up here, still have it. It's at 455 now. So that's that's something. And if you can see, we can take if I can draw a straight line here, it's at 454, 455. That's price resistance, because price stopped today where it was back in earlier in September. So now we have to see what's going to be on in the next few weeks. We have resistance at 455. We do have support coming in here, potential support at the 50-day moving average at $443.48. Then we have the 20-day coming in here at 439.79, and that's a good thing, although it is inverse to the 50-day moving average. Then, of course, we can come down here to 430 if we want. We can come down here to 426 if we want. And then the 200-day moving average is coming in here at $418 and change. Certainly, we would prefer that price doesn't come down that far. So at least if you're bullish, that's for sure. Now, we can see here that the MACD has moved over the zero line. That's a good thing. The RSI, the 14-day RSI, is back bumping its head on the oversold line, but not above it yet. We've got a lot going on. What with earnings season? We've got 2 more weeks of earnings season, at least 2 more weeks, and then a little bit after that. Then we have this announcement that will certainly affect, from Jerome Powell, that will certainly affect the market one way or the other on Monday and next week. So now we have to wait here. The SPY is in a good place, but we have to see what the incoming is going to cause as we get, again, earnings and more opinions on the Fed moves. So I would, we'll have to see if we can actually break to higher highs or if we have to come back down here and start testing some of these support zones. So trade wisely next week. Keep an eye on the SPY, and let's go on to our next chart. Our second chart today is a daily chart of the Invesco QQQ, symbol QQQ. This is the ETF that closely follows the Nasdaq 100 index, a very major index in our market, certainly a leader many, many times. And top components of it include Apple, Amazon, Alphabet, Facebook, and all of those that kind of lead the market around sometimes. So the Q's made its all-time closing high back here on September 7th at $382.11. Today, when I captured this chart, the Q's were trading down here at $373.96. That's about 2% off of this past all-time high. As you can see here with this all-time high, after making that all-time closing high on September 7th, it did roll over, it did come down, it dove below the 50-day, the 20-day and the 50-day, rallied back up a little bit, couldn't hang out any longer, and then came down to the September lows down here at 350. So it then rallied back up from that. We don't have much of an inverse head and shoulders here. I guess we could talk a slight case for a little tiny cup and handle, but at any rate, it did rally back up, and now it's sitting on top of the 50-day moving average, and the 20-day moving average is inverse or below the 50-day. The way it's positioned, it's not a really bad thing. We just have to see, again, as earnings reports are issued for these big momentum stocks in the next 2 weeks, can the Qs brush off Fed Powell's announcement, and can it rally back up to this 382 all-time high, or are the techs, mainly momentum stocks for sure, are they going to need to take a rest? And if they do, we've got support here, potential support at 370. Of course, there's price support from back in earlier in September right there, just above the 370, right where it is now at 374, 373. Then we have the 20-day coming in at 364, and we have more price support down here above 350 and at 350. We've got a trend line coming in here too. So lots of converging. We've got price, we've got trend line, we've got moving averages, and a lot of it's coming in here right about at this 355 zone with the trend line and that low down to 350 again. So we'll have to see with all this in line, if the Qs start lower, can it hold it up or not? And who knows, maybe they'll start higher. But we're going to get a lot of surprises. So remember, again, please, please, please trade what you see, not what you think will happen, because quite honestly, nobody knows what's going to happen next in the market. Okay, our final chart for today is a daily chart of the Sector Spider Consumer Staples ETF. Yes, you can see I'm getting a little getting a little defensive here, but we We need our drugs, we need our food, we need our personal items, and that's what the staples holds here, the staples sector, obviously. So the XLP has 32 holdings. Some of the top component stocks include Procter & Gamble, Pepsi-Cola, Walmart, Costco, Mondelez, that whole group. Now, when I captured this chart today, the XLP was just moving above its 50-day moving average, and it was trading at $71.32. I honestly like the fact today that it kept moving higher. It didn't roll over when Fed Chair Powell made those comments earlier today. The Staples ETF just kept, and these components just kept moving higher. I like that. Now, it did make an all-time closing high on August 17th. Actually, I believe it was right back here. It's one of these two highs, but I think it was this one. It made an all-time closing high on August 17th at $72.97. Then it came down, came back up. Then we have a shallow double top here, and it fulfilled that double top by gapping to the downside in September, rallying up, couldn't stay there, came down to the 200-day moving average, again now coming in at $69 and change, but it held at that 200-day moving average, then popped back up. And we could make a little case here if we wanted to for a little kind of a head and shoulders move. At any rate, we can use this if we want for a neckline. Not clearly delineated, but okay. So anyway, it moved back above the 20 and then has started back up, and again today stayed strong, which I like. Excuse me, again at $71.32. So in the coming week, if the market stays reasonably, if it behaves itself, and if the XLP can close above the 50-day moving average, let's call that 71.50 to make it easy, I will add a small position to my trading portfolio. Now I'm going to put a stop in down here. You can raise it if you want, but it's not very far. I'm putting in a stop at $68.90, just below that 200-day moving average, just below it. And of course you can see where, as I talked about, price did that earlier in September and then moved back up. So I am going to put my stop down here at $68.90. If and when the XLP rises above that prior all-time high up here, and we can make it easy on you and say $73. If and when it rises above $73, I'm going to add to my position and trail my stop. Of course, it'll be trailing by then. So you may want to keep an eye on the XLP in the coming week. And now, before we go on to final thoughts, please know that if you'd like to become a more successful trader, please check out my trader training programs. They include 7 Steps to Successful Trading, our flagship product, How to Swing Trade Successfully, that's one of the most popular ones as well, and Trade the Trend to Profits, which is a nice way to just kind of take things easy but still be technically correct and have all your stops in the right place, and you don't have to stare at everything all day. These programs can help you increase your gains quickly and easily, and there's a lot more programs, as you will see. To see all of my online training programs, simply go to the link on this screen or click on the orange button below. Very simple. Okay, so for our final thoughts today, we're going to ask, am I building a solid mental foundation on facts so that I can think with certainty? That's important. Am I building a solid mental foundation on facts so that I can think with certainty? Now, one of the biggest mistakes that I see traders make when they enter trading, and then, hey, sometimes we keep doing this even after we've been trading for a while, is that we set unrealistic expectations for our profit targets. And that's especially true. This market's been a bull market now for 11 years. That does not ordinarily happen. So there are many, many traders who've never seen a bear market. And it's an eye-opener. So, okay, so let's go back to this. We set unreal expectations for our profit targets. And maybe we think along these lines. Okay, I have $25,000 in my trading account, and that's actually the minimum you have to have to day trade more than 4 round trips a week. Okay, I have $25,000 in my trading account. Now, with margin, that comes to $50,000, or with 4 times margin in a day trading account, that's $100,000 trading power. I should be able to earn $1,000 a day or $250,000 a year because there's about 250 trading days in a year. Now, to think that you're going to earn $1,000 a day with a $25,000 account, which comes to $250,000 a year, is really unrealistic. So what if you did say, well, I should be able to make $1,000 a week? Well, now, while that's a little more realistic, that's still 100% a year. And while it's been done, it's not likely. And it's certainly not realistic thinking. Now, hear me out here. A better idea is to shoot for 3 to 5% profit per quarter, which is a 20% return a year, which is still very high. And most professional traders would love to have that number. That takes the pressure off, and you won't make as many mistakes or overtrade or do revenge trades when you're trying to reach your goals. And here's another idea. It might even be a better idea. Establish performance-based goals. Performance-based goals. Shoot for following your trading plan 95% of the time. And you say 95, oh, Toni, I can follow my trading plan. Well, then, as long as it's a well thought out plan, do it. Raise the bar after you've done it, followed it 95% of the time. Raise the bar to following it 98% of the time. Now, if you trade to trade well and not to make money, you will automatically bring home more profits. Why don't you try it for 2 weeks, then compare your trading sheet to prior 2-week period of profits and losses. You should see an increase in your profits. Finally, please know that this is a great time to check out my trader training programs. To see all of my online training programs, simply go to the link on this screen up here or click on the orange button below. Very, very simple. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.